Before we jump in, a quick reminder that we publish our premium podcast, 19 Minutes, 3 times a month on the 9th, 19th, and 29th. It's a short, focused update designed to help you think ahead and make faster, clearer decisions. You can subscribe using the link in the description. Thanks.
Welcome, everybody, to another episode of the AgView Pitch. We're heading into another marketing week. We're already to the second week of December. We're getting that much closer to Christmas, and I'm sure everybody's got all their Christmas shopping done. And we've got with us today Chad Hart. Chad, you got all your Christmas shopping done already?
Don't I wish?
Yeah. My favorite holiday is the 4th of July because it's 80 plus degrees usually. You can smell the grass and it's warm. It's not super cold. It looks like out your window there behind you there, it might be a little chilly out there today.
It's just a wee bit cool.
Yeah. Yeah. Welcome to Iowa, right?
That's right.
Here. So sounds good. Well, hey, we could talk sports. It'd be a lot more fun to talk sports and football and coaches and all that stuff. But I think we probably need to focus on some market things here today. And one of the things I want to kind of start out with is we do have a report coming out here Tuesday of this week, and maybe some people are listening to it after the report comes out. But what I want to get from you is, regardless if they tweak anything in terms of yields or whatever, where do you think the market has the yields targeted at? Where do you think the market's trading in? Let's start with corn.
All right, I'm going to tear this apart two different ways. One, I wouldn't expect them to tweak the supply side in this report. Typically with December, they leave supply alone because they're not doing an additional survey this month. And they'll do their final estimates, or what they call their final estimates, in January. So typically December is, if you will, a demand-only update. That said, I will say that when you're looking at the markets, I think the markets are expecting when we get to January that, we're going to see some production adjustments. I think especially on the corn side. I think as you look at where the trade has consistently been for the past at least month and a half, I think they've been trading in the 181 to 182 range when it comes to that yield. And USDA is right now at 186. So I think they're expecting a downgrade. And I'd say the precedent for this would be last year. If you think about what happened last year as we went through the harvest season, USDA was posting a higher yield than what I think a lot in the trade expected. And then when we got to January, we saw about a 5 bushel adjustment down with that crop yield in that January timeframe. I'm expecting the same thing here this year.
Mm-hmm. As far as we think about, I'm going to transition a little bit here over to soybeans for a minute. As far as we think about the demand side of things, we talk about the supply side, but let's shift over for a second and think about demand. I want to start with soybeans. We'll come back to corn, but it doesn't look like there's any way on God's green earth we're going to get to the number we need to match where supposedly we're going to get to by the end of December. How much of that matters to the market, and how much more do we got to move on the demand side for China to get a little strength in this market for those that still are sitting on some old crop, and almost for my perspective, even more importantly, on getting started on some new crop?
Well, that's the deal. I think as we look at the momentum there, I think the market is sort of reflecting that, China we know has made some moves, but it hasn't fully shown up in the official data yet. I went back and was looking at how prices have evolved here over the past couple of months. If we think back to, say, cash prices, early in harvest, so I went back to early October, we would have been looking at cash in the, let's see here, it was a 941 was the average on October 3rd. Went and looked for yesterday's average price across the state of Iowa, and we were at 1045. So we've seen a strengthening of about $1 over the past couple of months. And I think a lot of that is due to the thought and some of the signals we've seen that China has made some purchases. While they haven't hit the official data yet, there's enough smoke there to say there's fire. And that we think we're going to see that in the data. In fact, that's one of the things I'm looking to see as we move through the next couple of weeks, we start to see those first China sales showing up in the weekly export sales data.
Yeah.
Then I'd expect to see it show up in the grain inspections as we begin to start to move that crop, because we figure most of those deliveries are going to happen here later this month into next month. So I think we do have something building there. What the trade, I think, is looking for is just how big a bump will we get from China? And this goes back to the discussion about when the agreement was reached between President Trump and President Xi. We know that they discussed certain levels, but there's nothing written. There's no written document to go back and check. And one of the big questions I think the market's trying to figure out here is that when there was this discussion of 12 million metric tons for 2025, and then put that in perspective, that would be about 430 million bushels. That would be about half of what China usually buys from us. But the big question is, how do you define the year 2025? Is it the calendar year 2025 or is it the marketing year 2025? Because that has a great deal of difference as to how big the sales should be coming up here.
Mm-hmm.
If it's calendar, that's not in our favor, because that means China would get to count all the purchases they made early this year. Think about January, February, March. So that would reduce that 12 million tons significantly. On the other hand, if it's marketing year, meaning it started, September 1, well, that means we should see a lot more sales from China coming here over the next couple of months. Because I would agree, I don't think they're going to get it done by, the end of December. But are we going to see that follow through in January and February from China in order to try to meet that goal, if you will?
Mm-hmm.
But that again is a big question mark. In that agreement, was it the calendar year or marketing year?
Mm-hmm.
And right now, I'd say from the outside looking in, that's still unknown.
Mm-hmm. Let's stay on that same topic with corn. Obviously, demand has been pretty outstanding. Just as an adjective to throw in there, probably not even sufficient adjective. Talk a little bit about that, its influence on price, not only currently, but how you envision that going forward. And does the bean thing influence that too? So I'm throwing you a curveball at the same time here to blend that in, because they all, corn, soybeans, and wheat kind of tend to influence each other. And so, we're talking about the demand side for corn, but this soybean thing's going on over here on the side, which could influence it one way or the other. So kind of blend those together. What do we watch, and as producers, what do we need to be paying attention to there?
Well, that's the deal. I'd say what the corn and soybean markets have allowed us to do, at least here for a little while, is sort of separate the two when it comes to trade right now. Because, we've concentrated solely on China when it comes to soybean trade. That's where the problem lies, and everywhere else seems to be functioning fairly fine. As you mentioned on the corn side, right now, we are seeing incredible sales. The idea is right now we're on a record pace. That's what USDA's got built into the estimates right now. And actually, that's one of the big numbers I'm going to be watching on Tuesday is, do we see USDA tweak that corn export number? Because the sales pace thus far has been phenomenal.
Mm-hmm.
That said, we still have to worry about the possibility of trade disruptions there. I know, especially in my case, I'm watching to see, especially as we look towards Colombia, for example, has been a growth market for us for corn over the past several years. They had basically reached number 3 in terms of our biggest customers when it comes to corn. So, quite sizable market. Yet I've been watching for the past couple of weeks, that trade has been slipping down a little bit here because of the tensions down there, especially with Venezuela. But let's face it, Colombia is right next door. So I think we still do have some concerns as we're looking at corn trade right now. But the data thus far, like I say, has been fantastic. And if we can keep that pace up, while it's not necessarily pulling corn prices significantly higher yet, it's basically chewing through what we believe is a record crop coming in this year and helping set the stage for potential price growth as we look in 2026.
Mm-hmm. Interesting. I appreciate that perspective. I'm going to continue to shift gears as we have a conversation here. Another one I want to talk about that I think we need to be paying attention to, because the world has shifted, obviously, with South American production. Argentina on the corn side, pretty heavily likely their weather for second crop corn and all, how all that stuff affects us. So it's not just soybeans we got to be thinking about. It is also corn. Talk a little bit about, as farmers, kind of like we watch the weather market in the summer, we need to probably be watching the weather market during the winter now, because there's this other country that's doing what we do and more of it in some cases. Talk about what we should be watching as producers and how maybe that's important to navigate our marketing decisions.
Oh no, I definitely agree that we need to be paying attention to South American weather at this time of year, especially with, I would argue, soybeans, but corn as well, because when we're looking at global production, and the reason I'm going to lean more heavily towards soybeans in this case is because with corn, the U.S. is still the dominant producer worldwide. We are by far the largest producer in the world, and therefore, our internal market weighs heavily on what's happening in the global market. When it comes to soybeans, while we're a big producer, we're no longer the top dog. And in fact, with Brazil being, roughly what they'd be at least 50% larger than what we produce, it's their market that helps drive global price signals. So we do have to pay attention to what's happening down there, because any weather impacts that, affect their market chain through global prices back to us. And so when they're having problems, that opens up some marketing opportunities for us here. On the other hand, if we can see a fantastic crop developing down there, then we know we're going to see downward price pressure, and we need to be ready to react to that. And I would say that's something that has grown in importance over the past several years, because while we haven't necessarily geared up our production of soybeans, definitely Brazil has, and that is arguably muting some of the price signals we would have expected to see over the past few years. Even as we've gotten tighter and tighter in terms of our soybean supplies and stocks, that doesn't necessarily chain into a lot of volatility in the prices that we see, because we know Brazil is basically backfilling the global demand, even if we can't.
Mm-hmm. Okay, so as I said, I continue to shift gears here because there's lots of stuff going on right now that I want to get your perspective on. The next one that I want to hit on, and I appreciate everything as you're giving us this perspective here. I want to hit on basis a bit, and I want to bring it closer to home now for a minute. And this gets watched all over the place, multiple states everywhere. So we're seeing a pretty big basis dynamic where it's really getting kind of strong in the East.
Mm-hmm.
And it's really good, and it's like hit and miss though. It's like one week it's got really good, and then it comes right back down again. So it's met with the market shifts and things. What's your take on, just again, farmers making decisions here towards the end of the year? Some got to move grain yet, some maybe don't. Do we need to be watching some things for January as stuff really gets moving? Or should we be thinking about taking advantage of some basis opportunities? Should we be sitting on our hands, not necessarily looking for advice, but just things that we need to be paying attention to so we make good decisions around basis management and price management, because they're never the same day.
They're
A lot of
never the
times
same day.
Yeah, a lot of times you got to manage them separate. So I kind of want to get your perspective on that as well for everybody.
Well, that's the deal. I would say we definitely need to pay attention, and we've got to be looking for those opportunities. In fact, today, it's as I sort of just feeling around, seeing where the markets are situated right now. I just checking local, price levels here. And, within a 15-mile radius of me here in Ames, I've got about a 25-cent spread in terms of cash pricing right now.
Mm-hmm.
So that tells you, that, basis levels are incredibly fluid right now, but there are definitely some opportunities to gather out there. In fact, when I was looking at, most basis levels that I'm seeing here are, fairly weak given all the supply that we've got. But I was noticing that where I was seeing the better basis levels, it's the ethanol plants. That constant source of demand that they have to feed those plants is key, forcing them to have that elevated basis there to give some opportunity to move some crop today. And so it was creating that 25-cent gap. And so that's what I think we've always got to be cognizant of, be watching for. That, can't just lock into one location, one market and sort of pay attention there. We sort of need to shop around. That especially in a year like this year, where we know, for example, on the corn side, even with that downgrade in the yield I talked about earlier, we're still talking about the largest crop the U.S. has ever produced in corn. So we know that's going to weigh heavily on basis moving forward into 2026 until we use up a good amount of that corn. So that's going to put that downward pressure on basis for quite some time. But I think we're going to see these opportunities where ethanol will flare up for a while. We're going to see the rivers, flare up at times. I think there's going to be some spots where we're going to see the feed market also kick in a bit here. So that's going to influence where those basis levels tend to strengthen. You mentioned you've been hearing about more pressure on the eastern side of the Corn Belt. I'd agree with that because I'd been hearing from farmers, on that side of the country that the crop was maybe a little lighter than what they expected, and that has opened up those opportunities there. So, like I said, it's one of those challenging times, I would say, where we've got a lot of moving parts. We're trying to figure out just one, how big these crops are, two, how much international demand that we have. And what that's doing is that's creating a lot of uncertainty around not only the futures prices we see, but how it changes back to that local cash price through basis.
Mm-hmm. I've got about a 5-part question I'm going to try to make into a 1-part because, Chad Hart, the Iowa State University economist, is what I'm going to ask a question of. And we're working with a lot of clients and we're seeing a lot of cost of production things. And I'm going to shift over, as we continue to shift gears, I'm shifting gears into 2026, but I'm thinking about 26 while I'm making 25 decisions. So my question for you is, we've talked about all these parameters as we make sales and make decisions for corn and soybeans on the 25 crop and the considerations and the perspective that's important that we manage. As we're making some of those decisions in 2025, and as we look at the cost of production on corn, at least from our client base, getting really close to the cost of production, soybeans not so much, and it's still not very fun to sell below the cost of production or even at break even. We'd like to make a little money. Talk a little bit about, if you're pulling the trigger on 25, how closely should we be watching the 26 decisions at the same time? Comments on your perspective.
Let's do. I would be watching for those opportunities. In fact, I was at a meeting a couple of days ago over in far eastern Iowa and talking with the producer, and we were talking both old crop and new crop decisions. So because they were looking at not necessarily making a sale today on their old crop, but they were looking at not only holding their old crop a little bit, and they had a forward price that was fairly attractive, but they were also looking at that next year's price as well. And do they put a marker in the sand? And I was like, in this case, we always want to have an eye towards what is new crop pricing looking like here. And if we know we can put in a marker at a price that is comfortable for us financially, it's worthwhile to do so. Um, you know, I would say we never want to ignore when the market's going to provide an opportunity for us.
Mm-hmm.
And sometimes we never know when that best opportunity is going to come by. Case in point, if you think back through the past year, on the corn side, our best opportunity for marketing came right at the very beginning of the year. And so we need to be ready to take advantage of those opportunities when we see them.
Mm-hmm.
And I'd say especially now, because we have gone through at least now a couple of rough years in a row, where we didn't see the typical seasonal pricing that we're hoping for. Now, here in 2026, I do expect that to return, because if you think about that typical seasonal pricing pattern we talk about, I can tell you historically, it happens about 2/3 of the time. So we've got a pretty good likelihood of trying to get back to some semblance of that normal peak coming in that late spring, early summer time frame. But we've also got to be ready just in case it's not there. And that was definitely the case for the calendar year 2025.
Mm-hmm. Just an observation, but one of the things I've seen watching, we're really blessed to get to work with a lot of really pretty smart farm operations, and we don't give any marketing advice, but we have the cost of production dialed in and everything. And I watch some of these operations that do a pretty solid job of marketing. And one observation, I want to get your take on this, is I noticed that they do a lot of singles when the market's low. They're selling like 1%, 2%, just plugging this thing in whenever there's like an update or whatever. Conversely, you get into a year like, you go back to 12 or you go back to 21, 22, and you got these stupid high prices. They made big sales at a time. They would make like a 35 or a 40% sale, and they would also connect the next year with about 50% of what they just sold on the old crop, so that they're plugging in on that new crop. And that's always hard to do, because your current price going into that next year, it's like 50 cents or 80 cents lower. And it's like, I can't sell that. It's $7. I can't sell $5 corn. That's crazy. Well, yeah, you can, and that might be a really good sale. And I've noticed those guys do that. What's your perspective on, in this environment that we're in, just constantly being pretty aggressive on those up days and making some sales and keeping things plugged in, even if it's not the best price or the price you think you want? If you're making small incremental sales, it takes you a long time to get there anyway. Thoughts on that, or is that a philosophy that's just an observation? I just wanted what your thoughts are on that.
So I'm going to tell you, I like it a lot. And here's why. I mean, I've done some things like in my marketing class where I walk the students through some various marketing strategies. And one of the easiest ones I show them, but that tends out to be very effective in the long run, is a simple averaging technique, where you're constantly in the market doing little sales, every week or every month. But if you look at that strategy over, historical periods, that type of strategy often does better than trying to hit that home run over time.
Yeah.
In fact, I've shown that with the data that I usually walk them through, that, if you look at the past 20 years compared to other strategies, I found that averaging technique was basically gaining about a dime a bushel over the other strategies. Now, it's true in years that were really high priced, that averaging tends to be below, but where that averaging really shines is in years arguably like we just went through.
Mm-hmm.
When you're struggling to get around break even, being in that average pricing means that you're not necessarily capturing the high, but you're also definitely avoiding capturing the low.
Mm-hmm.
And I show them in a 20-year time frame, and then I also show them over a 50-year time frame. And what that ends up showing them is, whether I'm looking at a 20-year or a 50-year, that dime stays there. That dime has been consistent. That, just keeping ourselves active in the marketplace usually brings a return. And in fact, over the long run, has brought a return. Not each sale is a single, as you say. Some of those we're selling below our production cost. We're not necessarily hitting the target we want with each sale, but when we look at the string of those sales over time, they do achieve that.
Mm-hmm.
And I also like the idea of that when we know we are hitting a single, when we know we're making a sale above production costs. Yeah, let's put a little more, on that. Put a little more emphasis on that, because what that is doing is that's taking advantage of we know where we're at financially, and therefore I'm doubling up on that sale. I'm making that sale a little stronger. And not only looking at, as you say, looking at old crop, but do I want to pair that with maybe some new crop movement? Yeah, it does make sense. Because what we've tended to find is when we have those, well, let's go back to 2021, 2022, when we were making that, new cash sale in the $6-7 range, your futures were out. Yeah, you're discounted, but you're still talking north of 5. Would you kill for those prices today? Yeah.
Mm-hmm.
So it's, again, taking advantage of that opportunity that, even with that new crop sale, you're making a profitable sale. And I always like the joke that you always want this sale to be your lowest from what you're going to do from here forward. So if I'm putting in a $5 marker, that's a really good marker to put.
Mm-hmm. Yeah, that's really good perspective. And I think, part of it is, as we go through, essentially 23, 24, and 25, we've just seen this inflationary impact on the cost of production side that is and has been a real impact to try to navigate any kind of margin. And so I think, like you said, it just, as an observation, it's been fun to watch some of these guys that have been doing that. And I would argue that what you're saying is 100% right, just as an observation of watching some of these guys that have been playing that sort of game as opposed to trying to be price chasers. They've just been very disciplined. I also see them pretty disciplined in putting in targets, and then they just leave them alone and put them there, and and they'll watch that market and they'll put them up, on corn maybe 8-9 cents above, and then do another one then, and try to keep them going. But you really got to pay attention to the market pretty regularly. Any comments on strategies for putting offers in and stuff, or any target areas you guys are thinking or watching, or any perspective there?
Let's do. I do like the idea of putting, having offers in there. That, again, because, an offer is basically, rather than you trying to work the market, let the market work for you.
Mm-hmm.
So find, a target you're comfortable with that makes sense for your farm financially. Have that standing in there. And if that offer hits, get another one in there immediately. But again, these offers, what you're doing is, instead of trying to time the market yourself, you're saying, no, I know I want to make a move at this price.
Mm-hmm.
Put that in there, and that way you don't have to check every day. You know that if the market goes where you need it to, you're ready to take advantage of it.
Yeah. 80% of the time they hit at night, or when in a 5-minute window too.
Yes.
So
I like to say that the one farmer I talked to that told me that, he hit the literal top of the market was, back when, corn futures hit above $8, and he happened to have his offer standing in there. And, that's how you get it hit.
Yeah.
Is
Exactly.
the market oftentimes hits what you're looking for when you're not looking, like when you're asleep.
Right. Yeah, exactly. I have one last question for you. And again, Chad Hart, Iowa State economist. What are you guys seeing for budgets as you look at 2026? So my insight is different. We're looking at the 2026 budgets now that are just kind of coming in. We're kind of getting things dialed in. It looks like fertility and fertilizer costs are similar to last year. I think there's less being put on though, because the numbers are, at least the numbers I'm seeing on the fertility side, are pretty similar to last year. And it looks to me like we're just basically maybe on the cusp of some break even on corn, and we're still about 6% away ROI on soybeans from at least the numbers we look at. Are you guys seeing something similar, or what are you guys seeing? And this is kind of my last question, is just having you wrap up kind of the outlook, economic outlook that you guys are looking at for 26 at this point.
Yeah, so we're sort of in the midst of doing our production cost estimates now. So I don't have firm numbers on anything yet, but I would agree with your general statement there that when I'm looking, for example, at fertility, I'm seeing prices that are in similar ballpark to where we were at this time last year. Um, if farmers are looking to control costs there, as you say, I think they're doing it through maybe the amount of pounds we're putting out there, but they're still making that decision to apply.
Mm-hmm.
When we're looking at seed cost, I'm seeing and hearing from farmers looking to again try to control their costs there as well. Where can they maybe pull back on some of that seed cost, but still achieve the yields that they're looking to do there. So I think we are seeing that shop around, but in this case, within the seed varieties from the companies that they're looking for. So I see farmers making moves to try to control cost at the same time too, though. I think those costs are going to end up very similar
Mm-hmm.
to what we saw here in 2025. I think in my Iowa State numbers, they'll probably go up a bit. I think because of the timing of when we tend to look at the costs that we get, but it won't be a dramatic change.
Mm-hmm.
And I think the thing that's going on here is that you mentioned that, prices have definitely changed, say from 2, 3 years ago, but inflationary pressure on the cost side kept those costs higher than we would like to see. But it's also the case of for farmers, we've had enough income coming not only from, while the market's been reduced, we've had some government support funds come in and farmers reinvest those funds into inputs.
Mm-hmm.
That's both good and bad.
Yeah, it is.
It's good because that means you continue to grow the crop, but it's bad in the sense of it slows down the natural market mechanism that would bring those cost structures back down towards our prices.
Mm-hmm.
Because again, we have this extra money coming in that the market didn't provide, but we're going to invest it back in agriculture. And so that to me is one of the bigger challenges. If you think back to say when we've had similar situation like this, go back to say 2012, comparing it to like 2015. You saw prices rise, cost rise with it, prices dove,
Inputs
cost will
slowly go
follow.
down. Yeah,
But
eventually.
it takes time,
Yeah.
and the more support we get, the slower it takes.
Mm-hmm. Yeah. We see that too. I mean, I've used the number of about 70%. In other words, 70% of those funds flow right through the producer hands. The farmer ends up with about 30% of it, and from what our data shows, we don't keep a lot of it, and that I'm sure that number is flawed, because there's a range of depending on what the timing is and the situation of rented versus owned, and there's a lot of other things. The other observation we've seen too is inflation is, one of those factors. We have a category called return to management, and it's all their overhead expenses. And that number looks to me on the initial ones we've done, it's up about 4%. I don't know that inflation's up 4%, but it's really hard to spend less money on employees.
Mm-hmm.
You give them a bonus or you give them a raise, those are expected. There's just a bunch of sticky numbers, and that return to management category is kind of a big number. It can be $100 an acre for a lot of farm operations, and that's a sticky one to, to ratchet back, for sure. I'm going to give you the last word. What do you want to leave producers with as they head towards Christmas time and they're thinking about their marketing and they're thinking about 2026? What do they focus on? What are some of the key things you want to leave guys with?
Well, to me, it's I'll put it this way, since it is cold outside, hopefully while you're gathering with the family and enjoying the holiday season, this is also a time to to sit down and do a little homework. Spend some time, really firming up what that production cost looks like, but also allowing that to give you some guidelines and goals to where to put in those offers. This is our time to do homework, I would argue. That as we prepare for the new year, let's have that marketing plan ready to implement day one of the new year. But to do that, we need to do this homework first. Now's the perfect time to do that.
That's a great message to leave, especially from a teacher. So I love that. That's exactly right, though. The money is made. I always tell people the money is made in the office, not made in the tractor. It's the tractor's got to run, but there's a lot of times you can hire somebody for $30 an hour to do some of the stuff you do, and spending your time doing the $500 or $1,000 an hour jobs are where the money's made. Sometimes it's not the most fun stuff to do because you called it homework, and it is homework.
It is homework.
But those are the things that make the business profitable at the end of the day. So, hey, Chad, as usual, super awesome perspective. I love your take on things, and I really recommend people come back and look at that and jump on the Iowa State website. You guys have a ton of really good decision tools and things on there that as guys are doing their quote unquote homework, you guys got a lot of stuff on there guys can really benefit from. So we really appreciate that. I want to also ask people if you're on YouTube, please subscribe and click the like button and all that stuff. Because even in our conversation here, if we even say the word Trump, which I just said it again, or we say anything that has anything to do with politics, all of a sudden it's kind of like a diesel engine, that if if it gets derated, all of a sudden it'll only go 25 mile an hour. Well, that's kind of what YouTube does to us anymore. I was talking to Mac about this, and he's like, yeah, they derate it or whatever. That's not the word he used, but they slow the process of it down. So if people are listening and you haven't subscribed, please do that. Please hit the like button because it does help us get this message out. Because when you got somebody like Chad on here and when you're taking your time to do that, there's a lot of really good stuff here, and we want to share that with as many people as we can. So again, Chad, thank you very much. I really appreciate your time today.
Thank you, sir.
All right. And thanks everybody for listening. If you got anything you want us to be hitting on, this is the time of year when we can do some business topics and hit on some things. So reach out to us. Let us know if there's topics you'd like us to be covering on the business perspective. With that said, have a great week ahead, and we'll catch you again next time on the Ag Pitch.